Hey, Bert Salazar here. A few weeks ago, I think it was about 3 weeks ago, I did a short video on getting everyone to know the importance and the understanding of the Rule of 72. And for those of you that haven't seen it, the Rule of 72 is a calculation that you need to understand and do in order to figure out how long it's going to take for your money to double based on a given interest rate. And at that time, I think I gave you three. I gave you 8% interest rate, 6%, and 4%. If you take 72, you divide it into 8, it tells you that if you're getting an 8% rate of return on an annual basis, it would take 9 years for your money to double. If it's at 6%, it would take 12 years. And if it's at 4%, it would take north of 18 years. I know many of you have lost a lot of money in the market. You know, we're going through the coronavirus and the bear market that's bringing forth along those lines. And for those of you that may not know this, all of the gains that we have had in 2020, at the very beginning of the year, all of the gains of 2019, 2018, and 2017 have been wiped out in less than 3 weeks. So if at the end of the day, all your money is going through these challenges, then do you really have a retirement plan in place? I would argue you don't. So in order for you to prevent that moving forward into the future, you're going to have to make some paradigm shift and making some determinations as to not only how you're going to be investing your money, but where you're going to be putting your money and what kind of an account is going to be the most suitable for you and your family in retirement. As a matter of fact, if you lose 40% in the market, and many of you have lost more than that, but just take an average loss of 40%. In order for you to recover in 1 year, you would have to earn a 67% rate of return in order to offset that 40% loss. And I have never seen a market do 67% on any one year. So what if you're able to get an 8% rate of return every single year thereafter, after you've gone through a 40% loss? Well, it's going to take 6.6 years, 6 years and 6 months, in order to get you back to where you were 6 years earlier when you lost 40%. So the other rule I want to bring to your attention today is a rule of 115. And the rule of 115 determines how long is it going to take for your money to triple based on a given rate of return. And the reason why I'm talking to you about the rule of 115 in addition to the rule of 72 is that for many of you, when you factor in taxation and you factor inflation, you're going to have to triple your money in the next several years in order to get back to even to where you're at today. So if we take a look at the same 8%, 6%, and 4% rate of return, we know that if it's at 8%, you take 115, you divide it by 8, and it's going to tell you, I wrote it down here, 14.4 years before your money's going to triple. If it's going to be at a 6% rate of return, it's going to take 19.2 years for your money to triple. And if you use a 4% rate of return, again, take the 115 divided by 4, and it's going to take 28.75 years, or 28 3/4 of a year for your money to triple. So it's very important to understand, what losses can do to your retirement accounts. It's also extremely important to make certain that you have accounts that can protect you from a downside by creating guarantees and creating a principal protection program that will give you the ability to maximize the return during positive years, but get rid of all the negative years in any type of investment that you do for retirement purposes. It's also important to understand the following. I went back to 1999. In December of 1999, for the first time in U.S. history, the Dow closed at 10,000. And if you look at what the market is today, especially since we have just gone through a 10-year bull market, usually bull markets are going to last anywhere between 4 to 5 years, sometimes 6 years at the very most. But we have actually gone through the longest bull market in history, which lasted 10 years. And then still, based on where the market is today, the average rate of return for that 20-year period between 1999 and 2019 has been 4.29%. So the bottom line is that all of you are trying to chase the higher rate of returns. You're putting your money at risk. You don't understand the risk and reward relationship in your assets. And the challenge for many of you is that if you're very close to retirement, or you're already in retirement and you have no choice but to go into that 401k that just became a 201k, and you need to take money out in order to maintain your standard of living, now you're compounding the negative effect, because not only are you taking money out of an asset that is losing value every single day, but on top of that, you have to sell a portion of those assets in order to make ends meet from 1 month to the next. So at the end of the day, always remember, if you have any questions regarding, how to fix this mess, how to create a retirement portfolio that your principal will always be protected, and how to do it in such a way that you can minimize any type of inflation forces that may be attacking you, and most important, that you can reduce your tax liability in retirement, then please feel free to reach out to me. You can call me at area code 786-766-1042. Again, 786-766-1042. Or you can send me an email at Bert, B-E-R-T, at GablesTaxGroup.com, and we can schedule a video conference just like what we're doing today at no cost and obligation. And at least I can answer some of the questions that you may be having today, because I would argue that the vast majority of the advisors you're doing business with are not reaching out to you. They're not calling you because they're afraid. They're afraid of what you may say to them. So you have to be proactive for your own benefit. And always remember that my number one goal for all of you, whether you happen to be a client or you happen to be a follower, is for me to help you change the way that you see things, because when you change the way that you see things, the things that you see change. Again, have a wonderful day, and I'll talk to you again soon. Take care.